Hi, everybody. Welcome to another episode of the Ecom Pulse podcast. I'm Eitan Kotter, your host. I have a special guest today, Kunle Campbell from Octillion. Kunle is building a house of digital first CPG brands, host of a top rated 2X e commerce podcast, and even wrote the e commerce growth strategy book. Welcome to the show, Kunle. How are you?
Thank you, Ethan. I'm doing very, very well. And thank you for the introduction. It's quite warm.
Yes, Kunle. I mean, you've done so many things in e-commerce and retail, and I know you are very busy also, evaluating and acquiring brands. So plenty of things to talk about today. But let's start, from your personal story, Kunle. I mean, please share with us, and you can start whatever you want, right? I mean, about your experience and professional background in e-commerce.
I'll give you a short version, but this short version will still start from 2004.
Wow.
In
Okay.
So in 2004, I went through the formal education routes in e-commerce. I attended one of the first e-commerce masters programs in the UK. It was with Warwick University. It's called e-business management. So it took us through quite theoretically, all the facets of building an e-commerce business, whether it's B2B or whether it's B2C, just the general facets. I just got the lay of the land. Okay.
Yeah,
If you want to enable an enterprise, these are the things you do. These are the things to be aware of. If you want to start an e-commerce business, these are the things you do, and many other things. So we even went into things like accounting and finance just to understand, from a cross-functional standpoint, what it takes to build a business. And I got stuck into, well, I didn't get stuck. I actually applied for a thesis that was attached to a company, and that company had a very unique problem to in digital. They
hmm,
were a startup international real estate company, and they wanted immediate exposure, and they didn't have necessarily the budget to go into like above the line marketing. They did have it, but they didn't have the resources to continuously advertise and above the line. But they kind of understood, what it took to build a business. So I was
sure.
hired as a student along two other students there to see what we could do. And the results there, or the immediate need was, let's get them up on Google, right, for terms related to the markets in which they operate. So let's say they sold property in Bulgaria. If you typed out property in Bulgaria, in UK or
Hmm.
Ireland, you'd want to see their website. So I was part of that engineering team, like search engine optimization team, to actually really building this business. So this business essentially went from zero to seven figures, mid seven figures,
Wow.
fairly quickly. It was
Wow.
opportunity. They're selling £500,000 homes, but they
Hmm.
have commission. So it's once you get the leads in, it's very, very easy to close, especially at that point in time. If you remember, there was a boom.
Sure.
Lots of property prices in the UK were going high, sky
Highs.
high.
Yeah.
So people were releasing equity and buying property all over the world.
Hmm.
So after the 1 year, I was immediately hired as a digital marketing manager for that company, and built my team. We were about 5 or 6 people in my team. And then 2008 happened. In 2008, there was a financial crisis, if
Yeah.
you remember. So my
Sure.
team of five just disappeared immediately, but they still wanted me because they still wanted to put their heads above the water. At that point, I had reached an existential crisis because I'd built out a blog, actually, international property. I was featured in New York Times, Herald Tribune for a blog. It was like an international property. It was called Overseas Property Mall. It doesn't exist anymore. And I was also doing lots of affiliate marketing, work. So I'd built out a stash. I'd actually registered a business while I was in company.
Yeah.
And so I just thought, I already have this business I registered. Why don't I just become a consultant for this company and then try and do that over to more local businesses? So that's what I did. And they were very happy and grateful that they were my first clients. It meant that they didn't pay so much with regard to like taxes and all of that. I was just another business. They sent an invoice to them, and then
Yes.
they paid.
Yes.
So I did that, and then I had a small local agency in Oxford here, and it was good for a few years. And eventually, when I started to get interest from I got the opportunity to speak at an event, and I started to get interest on like from other people outside, other businesses outside of Oxfordshire and outside of the UK, outside of Oxfordshire. I
Mhm.
started to realize that there were e-commerce businesses. And that's when I decided to really double down on e-commerce. So I started my journey in 2013, sorry, as 2012, sorry, as an e-commerce SEO person. So my focus then was like
Okay.
e-commerce SEO, and I did AdWords too, so it was
Hmm.
e-commerce SEO and AdWords. And I remember this client, they were quite a big UK private e-commerce, client. They came to me, they attended a seminar I put together, and I did promise them after 12 months that I will double their traffic, right?
Hmm.
We'll work out a way to double your traffic. We'll do some content marketing campaigns and we'll double you. And we did double their traffic in 1 year. But what I realized was having doubled their traffic, it didn't really show on the bottom line.
Uh,
Right. So it was like a 30%, which is still good, in terms of like year on year growth,
yeah.
but it didn't. So it humbled me, that
Hmm.
experience. I actually wrote about it in my book. I was like, okay, this experience actually humbled me. There must be other facets towards growing an e-commerce business that I'm not aware of. Why is this not
Why is
working?
it not working? Yeah.
So that took me into like, what is the strategy in growth, and I eventually started to I ditched the agency. I started to work more as an interim growth expert,
Expert. Yeah.
growth support, growth
Hmm.
manager, CMO, all of that stuff. I started to learn CRO, conversion rate
Yep.
optimization,
Yep.
layer that in with Facebook advertising. So I just wanted to get a very broad spectrum because I know somewhere inside me, I wanted to still run and operate an e-commerce business at some point.
Yeah.
I just didn't want to continue being an agency,
So there
and
was a
so
plan. There was a plan
there
there.
was kind
Yeah.
of, yeah. So I met my co-founder, Ayo Desu. He was writing a research paper for University of Birkbeck around a search fund. If people are not very familiar with the word search funds, essentially an investment vehicle in which it's typically operated by one person, and that person actually either raises the capital privately or it's their own capital to buy a legacy business and essentially just use that as a job and as a retirement or as an asset to grow eventually, and whether to sell it or to continue to operate it, they just buy one and focus on one. So I reached out to Ion. I was like, so he had this search fund um, concept which was related to e-commerce, and I was like,
Hmm.
well, we could actually build out an e-commerce hold core after a few conversations, and I was like, and that's when I joined Octillion as a co-founder,
Okay.
and we just our thesis is buy good for you businesses, so consumer brands that are either in the food and beverage space or in the skincare and beauty space. So but they have to be good for you. So we're not going to be buying, businesses that are selling, high fructose or sugar, just unhealthy foods, and neither would we do that for skincare.
Okay.
So yeah, it's been 2.5 years now as on the operator side of things, which is humbling and very, very, very exciting at the same time. And it's been happy days. I hope that was not too long winded.
No, no. I mean, it was very, very interesting. Everyone has a story, and the journeys are very, very unique, right? So it's very interesting to understand where people are coming from and their journey. So thanks a lot for that. So let's elaborate about Octillion, right? I know you're evaluating brands, you're acquiring brands. Please share. I mean, what is your evaluation criteria? How do you, make decisions? What are the KPIs? How do you, work around evaluations? What is your acquisition strategy?
Very, very good question. So the first bit, which is the industry, we've cleared that CPG, good for you, food and
Yep.
beverage, health and beauty. From a financial standpoint, we're acquiring businesses with revenues from 2 million to 20 million, our preference is your single channel. So you could be Amazon only or D2C.
Mm-hmm.
We don't really mind. And you must have a net profit of 20%, at least 20%. And we look at performance over the trailing 24 months, not just 12 months. We look at the last 24 months to understand trends. We also don't want to buy businesses less than 2 years old, right?
Yeah.
And we're also looking at, okay, what is the trajectory? So I would go into their analytics or their Shopify analytics and kind of say, okay, this spur of growth you had 5 years ago or 3 years ago, what was the catalyst? And was it the same method you used to get to this other base point?
Yeah.
So it's a very holistic perspective where we're blending in like marketing insights with finance to make, so it's proprietary in a way. So on top of that, we really look at the catalyst to growth and if it can be sustained or if it needs to be transformed. So if the
Mm-hmm.
catalyst for growth, for instance, was influencer marketing to get you to 5 million in revenue, is it sustainable to get us to the next base camp of 10 million? Or should we sort of diversify? What are the options of diversifying? And we can plug in a Facebook ads expert there and say, could you please just give us a prognosis on the potential for this from a Facebook advertising standpoint? So we have a
Yes.
game plan to move. We buy out, so we typically also buy out. It's we 100%, but we initially sort of acquire 50 to 60%. Sometimes it goes as much as 80%, and there's an earn out
Yes.
component to the deal
Mm-hmm.
over 2 years, over a 2 year period. We prefer to deal with fewer SKUs, but we're not that's not too important from that perspective. And what else would I say? Those are the main criteria. So 2 to 20 million in revenue, single channel,
Profitability,
and
20%. Yeah.
that is right. That's right.
And okay, so in terms of the working capital that are required for the additional growth of these
Mm.
businesses, how do you handle? I mean, do you also provide some kind of a planning and financing for taking the companies to the next phase?
So for our first few deals, it's been a pot, an internal pot we've had.
Okay.
But for subsequent deals, we are looking at a syndicate model. So a syndicated model. So if we spot an opportunity, like an acquisition opportunity,
Mm-hmm.
what is likely going to happen for our next few deals is where, with the reputation where we have, where we'll be putting together it might be just one investor or a consortium of investors to go
Okay.
in on the deal.
Got it.
And a component of that deal would be to provide sufficient working capital for the next trailing 18 months so we hit our target growth, our growth target, as well as
Yeah.
just make sure the earnout is accelerated as quickly
Accelerated, yes.
as
And obviously
possible.
achievable, right? So
Exactly, from
yeah.
free cash flows.
Correct, correct. And how does valuations are calculated, in the space?
Right. So if you asked me this question 2 years ago, or even even at the start of last year, I'd have said 4x SDE or 4x net profit typically. So
Okay.
SDE is adjusted net profit to include other like director perks you get. So let's say you make a net profit, but you're also like leasing a car through your company. That's added to the value, and then you
Mm-hmm.
multiply the SDE by a multiple. So right now it's on a case by case basis. It can
Okay.
range from just 1.5 SDE. So let's say you're a single channel business, single marketing, single product business. You're not worth much, to be honest. If it's
Mm-hmm.
just one product and one channel.
Yeah.
But if like you're a retention based company, you have at least 45-50% of recurring revenue coming from subscriptions, for instance, because there's a difference between returning customers and subscriptions, right? Subscriptions are
Mm-hmm.
a
Mm-hmm.
longer term commitment, financial
Yeah.
commitment.
Yeah.
then obviously your valuation will go up. But I still think it'll be more towards the four. Three, 3.5.
Yes.
We're always open to negotiations. Obviously, right now it's a value. The market is very value driven. And yeah, it's important that the right value is attributed to the company. Now, if a company, again, remember what I talked about, the the historical trends of growth in the business. So if
Yes.
it's been stable over time, that gives you more credibility, gives the valuation more credibility, and gives you more elasticity in the multiples that it will
Yes.
command. So it really varies on a case by case basis,
Yes.
and also we if we're to bring debt into it for the acquisition, which we often do, then it would also be subject to the valuation of our financiers. So
Got it. Yeah, for
it's a
sure.
fine blend, right?
Yes, 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 and they have their own way of evaluating things, and
Exactly,
obviously
and it
provide
has to
this.
work. Yeah.
Any preference in terms of the commitment of the founding team, the management, or you're totally
The, the
agnostic
the
from it?
the the first 6 months of operating the business really matter.
Yeah.
So just ensuring that they and key members of their team are on board, particularly within the first 60 days, first 30 days of the business, towards really cooperating with our, process extraction, lead towards documenting
Mm-hmm.
and understanding all the facets of their business. And even then, something new would always come up.
Sure.
18 months down the line, there'll be some login that you don't have. So it's a win-win for everybody. So it's really, really constructive. We take a very constructive approach to just managing the partner. So we want them to be on site for 18 months at the minimum.
Okay.
But we don't necessarily need them to turn up in the office. you know,
Yeah.
it's
Yeah.
it's really, let's schedule this meeting. Could be a once a week meeting initially, and we essentially, extract all that we need to. And if they're very well prepared, a lot of the time they would already had, all of this documentation somewhere, and it would be a matter of us going through that documentation and asking further questions, which further reduces their time. So sellers,
Yeah.
if you're listening to this, prepare
Hmm.
for your sale. Prepare for your sale.
Yes.
So process transfer is easier.
Sure. Sure. And maybe last question on this topic. Any preference for their technology stack?
So with an Amazon, it's pretty simple,
Sure.
as in, like, it's
That's
Amazon.
obvious.
However, if there are upgrades in your WMS, for instance, we just have to we like Linworks, for instance, and so there might be some integration work with Linworks. So
Yep.
from operating, we're starting to see, to like certain tools. So, but again, I want to keep things open because you might be using a tool I've never used before. We
Okay.
don't want to change too much in the first 6 months. We want to know why you're doing what you're doing, and if it's working and maintaining cash flow, just leave it like that.
Yep.
And then once you really understand the good, the bad, the ugly, you can then make a technology decision, towards changing, systems. And then, like, we acquired a business. Their D2C was WordPress, or WooCommerce. We had to Shopify is it's more straightforward, right?
Yeah.
Yeah. And then there's, then you look at the stack within Shopify. Like, we just prefer the stability of Klaviyo, for instance.
Sure.
Yes, SendLane is good. No qualms about it. They're
Mm-hmm.
making a lot of noise. Appreciate that. But we know what we know, and our experts, so we have a web of key experts. They know what they know, and
Mm-hmm.
we just try and adapt. And I think it's more scalable if like systems are unified. There's an argument against it. It doesn't really matter. A lot of these things are just learning, on the job.
Mm-hmm.
But don't change too much, after an acquisition. Don't change too much unless if you're an expert in this, it really works if you just switch it,
Yes.
and that's going to unlock maybe 2 5%, maybe net profit savings, for instance. Why not?
Yeah. Yeah. Yeah.
It was like with one of our businesses, they had a gentleman agreement for fulfillment,
Mm-hmm.
with a supplier. So what they were doing is they were shipping all their stock to this said supplier. So any D2C orders, they said supplier was, order, sending it out in their way,
Yeah.
just there were like a
Mm-hmm.
mini fulfillment center. And we changed that. We were
Okay.
like, this could be, everything could be centralized on Amazon, for instance. And Amazon could, although it's not perfect because Amazon doesn't really think about that unboxing experience, but it's just much more efficient,
Yes.
so
Of
those are
course.
the kind of things you just
Of
no
course,
brainers, right?
and obviously from your perspective, looking at all these different, companies, is consolidating supply chain, consolidating fulfillment, operation, technology stacks, right? And
Hmm.
and obviously you're very much involved in the day-to-day activities, I guess,
Hmm.
post transaction in terms of the day-to-day operation, sales, and marketing activities. Great. I mean, Kunle, anything you want to add on this specific topic? Of course, you're inviting exciting companies and on board for evaluation. But anything else that we missed on
Yeah,
this topic?
if you have if your business aligns with the criteria I
Yeah.
mentioned, please just reach out to me. I'm very active on LinkedIn, or just email me at kunle@octillioncapitalpartners.com.
Yeah.
um it's a journey, I have to say. The market is thinner right now.
Mm-hmm.
We're seeing a lot of fire sales.
Oh.
What do I mean by fire sales? I mean businesses that were funded over the last 3 4 years by venture capital, and now they've run out of cash and they've gone back to their backers, and the backers are like, we're not giving you any more money.
We stopped. Sorry. Yes.
And some of the backers are insisting, you've got to sell, we'll help
Mm-hmm.
you sell, you've got to sell, so when you look at their numbers, it doesn't stack up. I went to London
Wow. Yeah.
2 3 months ago in November. I went for a meeting. I mean, I see this brand when I'm going in the supermarket. I see them,
Mm-hmm.
CPG brand, good for
Mm-hmm.
you, as in like it checked all the boxes. But they over index in their production facilities, right?
Okay.
And so they have these assets, these fixed assets, facility, um, the payback period dwindling, it's just behind them. So that it's an excellent opportunity, or that deal was an excellent opportunity um for operators that want to kind of like seize, get a lot of physical assets, so that they probably use that site for other things, right? For other, but like the deal was not sweet. They were not profitable. They were predicting profitability. So it's like passing on the baton. Who wants to take on
Yeah.
that risk? And then they were
Mm-hmm.
putting a value because they wanted to get back all their, like, at least just break even on the
Just break
capital
even. Correct.
expended.
Yeah.
So the
Recover
price didn't make
expenses.
any
Yeah.
sense. But
Yes.
so it was like they were selling based on revenue multiples, and it just didn't make
Doesn't make sense. Yeah.
any sense. So that's the market. At the same time, people who have really good businesses, many of them don't want to sell because the last trailing 12 months have not been particularly great for but for most people, for most brands, most businesses. And
Yes.
so they're sitting on their laurels. So a lot of the deals happening now are by word of mouth,
Mm-hmm.
so they're off market deals, before they get on any broker or platform.
Yes, yes, and we know, and you also hear that from, I mean, your, you know, prospects, and also when we talk to brands. I mean, 2023 was tough, right? First, second, third quarters, maybe some recovery in Q4, and I guess there are some a little bit more optimistic to 2024, right? So, I mean, how do you see that from your side?
I think right now, I think I'm speaking anecdotally. For me, it's really, for one of our businesses, really like net margin preservation.
Mm-hmm.
But here's the thing about net margin preservation. You try and you try and get you're not spending on growth, right? You're creating gaps in the market,
Mm-hmm.
right? That place you used to occupy, that you built with so much blood, sweat, and tears, is going to be taken over by another brand, and they might probably be occupying that space cheaper because you're not even competing.
Mm-hmm.
So it's like, yes, you need to preserve capital, but at the same time, you still need to look for levers of growth that keep you in the know, as in keep you relevant.
Yes.
It's a trade-off, and those brands that are not afraid to, or even have the capacity and not afraid to, you need to first of all have the capacity
Yeah.
and then not afraid to lean on your fear,
Mm-hmm.
and still, even if like growth rates were like your month-to-month growth rates last year were like 10-15%, yeah, probably still want to grow, but make sure it's 5%, maybe half of what was done at last year, if you're trying to really preserve capital, so you're still in that game.
Mm-hmm.
And then artificial intelligence, every member of your staff, should be able to utilize artificial intelligence to double throughput.
Yes.
You know, uh, you can go through customer support tickets faster with the assistance of well-trained, agents there.
Mm-hmm.
You can build landing pages faster with landing page builders, copywriters, who know how to use ChatGPT or any other generative AI, platform.
Mm-hmm.
If you have a graphic designer that's leaning in, rather than waiting for model photos, leaning in on AI to generate certain kinds of photos or studio photos, there are just many ways to leverage it to ensure that, okay, we're saving money here, and we're still trying to grow profitability,
Yes.
not necessarily even grow profitability, but just grow revenue. And yeah, that's my thoughts.
Yes, I mean, also with AI, I mean, stuffing is going to change. I mean, so many things are changing so fast, right? I mean,
Mm.
definitely AI is, we're just at the beginning of this trend, and it's being used in various use cases already, and it will improve also very, very fast. I guess 2024 will be something to really evaluate, definitely to cut cost, use time, but also see how it can accelerate, sales, accelerate marketing activities, differentiate, being more creative. Right, all these things are very, very important in anyone who's building a brand and is looking to hire people. I mean, this is a kind of a fundamental tool. So Kunle, great. I mean, let's talk about the book, E-commerce Growth Strategy. Maybe it's a good time to show. Okay, great, great,
That's
great.
it.
Yeah. So inspired you to write the book? And please share, I mean,
What inspired
more
me?
details.
Okay, so the 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 true and honest reason I've always wanted to write a book was to get more exposure and be known in my in my field as a subject matter expert.
Yes.
That's what everybody does, right? That's the selfish way. So I did
Everyone
have
wants
like
that, but not
every,
everyone write a book, right?
I
Yeah.
had four, so I made four attempts in this
Okay.
book. Four attempts,
Wow.
four attempts. I'm not kidding you. And in the introduction, I'll read the first sort of paragraph of my introduction, why I wrote this book, to
Yes,
set the
please.
scene for what has gone into creating this book and the trials and tribulations, and had one insight of mine that you're about to benefit from reading. I had a folder in my Google Drive named Book Project, and in that folder there were four subfolders: 2017, 2020, 2021, 2022 Kogan page. From the folder naming convention, you would be right if you picked up that I had three failed attempts at writing the book about e-commerce. In hindsight, I'm grateful for this sequence of failures, because at each of these timestamps, my fundamental first principles thinking on the Pins e-commerce growth strategy had been evolving, and doing so rapidly. I'm not going to read everything, but what I'm saying is that I failed several times, and the time I then succeeded, I'm no longer a consultant.
Ah.
I'm an
Okay.
operator. So it is what it is. Really, really grateful for for it. It took me 18 months to put it together. The only thing missing from this book is artificial intelligence, and I don't think there's any book that would, because as soon as I finished this book, that's when I think ChatGPT
Yes.
was released. But I don't think any book can capture AI the way it's evolving. So kudos. But yeah, the book is more. You think it's just a marketing book. It's 80% a marketing book, and then 20% an operations book. What are the other facets of growth in an e-commerce business? But it does encourage like cross-functional growth in
Mm-hmm.
e-commerce,
Mm-hmm.
and not looking at it from a one-sided. I'm going to use, like in my earlier example, search to grow your brand, or I'm going to only use Facebook ads to grow a
Mm-hmm.
brand. It talks about how from a top of funnel perspective, you bring them into a more retention, community based, brand first approach. So the subtitle of the book is A Brand Driven Approach to Attract Shoppers, Build Community, and Retain Customers. That community bit is really important.
Sure.
And if we go back to like the valuation of businesses, you get more more multiples of the back of a community built business, because as an acquirer you're buying both the community and then the business there in terms of the customers. You first become your audience, then you become a community, and then you have customers. So there are about 20. How many chapters do we have? I haven't opened the book in a long time. We have about 18 chapters in the book. And the first few chapters are just talking about the strategy. And I think so chapter 1 is just an overview of what e-commerce growth is. I have
Mm-hmm.
like 6 key principles. The customers is front and center. Optimize experience for habitual purchase. Honing on a culture of experimentation for continuous improvement. Be channel agnostic, so embrace channel marketing to grow. Winning e-commerce means being brand driven, and then growth is cross functional. So those are like my first principles of what it takes to grow a business, which are like fundamentals of the business.
Yeah.
So if like for the first time you ever want to do e-commerce, just try and understand those concepts before you build anything
Yeah. The
else.
basics, right? The
Yeah, the
basic
basics.
foundations.
And then the chapter 2 is more collaborative cross-functional growth, which essentially encourages that you have an e-commerce growth stack. And that growth stack is R&D, operations, customer service, marketing, finance, tech, M&A within the finance.
Mm-hmm.
Those are like tools, your tool sets, for that. And then the next 3 chapters are very important, because the chapter 3 is more about the brand core. So what's your story, pillars of brand building, brand equity, visual identity, brand positioning, all of that. And then 4 to me is the most important chapter, which has got to do with customer behavior. So really understanding the psychology of why people do what they do. And in the context of shopping, what is psychology? What are the psychological building blocks every consumer brand should know about their customers? And I actually take you through a journey of a funnel. So at top of the funnel, what are the triggers? What are the key what are the key motivations? What's your key objective? As a brand. And then we move into customer data, because once you then understand how people behave, you need to sort of find a quantitative way of measuring that behavior, which is customer data.
Yep.
And then every other chapter of the book, apart from the last 2 chapters, are like key marketing topics in e-commerce, like acquisition, retention, audience building, and influencer marketing, lifecycle marketing, search engine marketing. Just I can't really go deep. I didn't really go deep into this subject. I just gave you like
Yes.
these are the key
So
principles you need to know about social advertising, channel marketing, and then we end with like alternative ways of growing, finance, and then
yeah.
it's good for an executive in e-commerce that's just starting a career, and needs to just understand, okay, what do I need to know now that I'm working for like an e-commerce SaaS company, or if I'm working for an e-commerce business itself? What are the things I need to know? And then it will also be good for somebody who needs a refresher on e-commerce, students, and founder who just wants a refresher again. So yeah, that's a book.
Yes, amazing, and it sounds like it's that sharing information, like insights across various sectors. I mean, it's also on the marketing side in growth, the tech stack, right, which is probably fit for more of the directors of e-commerce and those who are responsible for the technology stack, the finance. It just covers the entire array of challenges and issues while running a complete brand, right? So I think it's encompass everything. And let's maybe just try to dive into one of these topics. I know you wrote and you speak a lot about brand building, right? The importance of brand building and
Hmm.
crafting an emotional journey or an emotional intelligent marketing strategies.
Hmm.
So I'd love you to elaborate on that because this is a very interesting topic.
So, at the heart of it all, right, we're speaking to customers, right, to humans, sorry, and from a humanistic standpoint, we are we feel we feel as in like,
Yeah.
and
Before we
whether
think, right? We
we
feel
feel we
before.
think exactly, desperate can craft feelings as brand owners. We can actually subtly direct people to take actions without actually knowing it, just because they have a good feeling with us as a brand every time they interact with us,
Yes.
and it's a good space to be. So, and at each stage of the funnel, that feeling, as much as it's constant, the objective is different. So that's it as a top level. Now, to start that feeling, your brand story has to be there. It has to. People are going to remember this conversation from my introduction more so what we're talking about now.
Hmm.
If I want to communicate a point to you, you'll learn it better if I tell you a personal story.
Sure.
So when you become essentially a fantastic storyteller, masterful storyteller as a brand, you begin to see that the friction, the purchase friction actually reduces, the resistance actually reduces over and over as you go on. So if we understand emotions, we understand when to trigger fear. We understand, and and the emotions should be primary emotions. Fear, anger, they're in the same space, feeling good, love, in the same space, sense of community in the same space with lots of serotonin.
Yeah.
So with the community building, you know why you're doing it, the feeling you're trying to get everybody to feel at that point in time.
Yes.
And I think if brands do that, they'll be more intentional with what they put out and how they communicate with audiences. Remember, audiences are like the first step. From audience, you build a community, because the audience is like, I start out an Instagram channel, people who see the reach. The community are people who then who start to comment, right? Who engage with me. That's community level one. That's a community that exists on Instagram now. Instagram has created like subscribe. Every platform now has a subscribe.
Subscribe. Yeah.
So with the subscribe, they want you to maintain community within their platform, because what they found out is that they're losing community off the back of by
Yes.
providing email addresses. And then you get into the things like convert kits,
Yes. I
and
mean, people are building
all the use
communities outside of
that is right.
Instagram. Yeah.
So community is that, and then you have premium community where they're paying that extra, and then you have customers who just want to support you. They love what you're doing, and it's all driven by emotions, and not everybody is it. is equipped to build community. You know, some people, it's just, you need to find the right people, you know, in terms of talent to really grow community. And it's
Yeah.
not just a this is it on my CV. It's more the ability to get people to feel. It's down to feeling, and the feelings
Yes.
are they're more a mammalian brain, right? So
Exactly.
so
Yeah.
so that's kind of like my thoughts, you know, there.
Yeah.
I think I talk about it. I talk about the human brain in customer behavior, but that's more in chapter 4. I really, yeah, that's more in chapter 4. But yeah, from a branding standpoint, you obviously want to nail the personas. You want to know who your audience is. Obviously, that's really broad stroking. But if you create a range of personas, that would help you, you know, quite a lot. And then yeah, that's really it. Really.
Yes. Yes. You know that Daniel Kahneman, one of the leading neuroscientists, right, of our age,
Mhm,
right, explains that 95% of our daily decisions are being made, you know, by our instincts,
mhm,
right, and not by our prefrontal cortex. Only 5% of our decisions are made when we think about it. So we take a decision from an instinct. Instinct is just accumulation of life experiences, right? Although we
mhm,
call it gut instinct, but it's happening in the brain. And we take the decision instinctively, and then we use the prefrontal cortex to explain to ourselves why we took that decision,
mhm,
right? And it's really amazing to realize, right, how, you know, reptilian mind and emotional mind is so like 95% of any decision that we make. So it's fully, you know, resonate exactly with the emotional, you know, decision making that you've mentioned, and perfectly clear. Yes. Wow, Kunle, it's really, really insightful, and thank you so much. I mean, for all the great stuff. Kunle, on a personal note, can you tell us something about yourself that most of your professional network are not aware of?
I'm a coach. I'm a football coach for
Really?
my 7-year-old son, and
Wow.
I don't watch. I don't even have a favorite football team.
Really? This was my next question. You don't have one. Okay.
As in, all the only football I've been exposed to throughout my life has been like World Cups, right?
Yeah.
World Cups, maybe Olympics football. There's
Yep.
some exciting Olympic football matches in the 90s,
Hmm.
but like I don't really. I'm not a football guy, but I just thought my son was having challenges in the playground in school. It was like all the boys play football. I thought this is a gift I should give him. It's a
Okay.
language. You know, football is a language in my opinion.
Of
So
course. Culture. It's a
yeah.
lot. Yeah.
So and now he's getting. I said, "Who are your friends?" He said, "All the football boys." It's like, okay, it's
Good.
working.
It's working. Yes. Wow, Kunle, thank you so much for your time. So,
Sure.
where is the best place to find you?
I'm kind of like I'm active on LinkedIn. I try and post like 5-6 times a week
Hmm.
on LinkedIn. And then email Kunle at octillioncapitalpartners.com. Yeah, those are the two main channels. If you slide on my DMs in LinkedIn, very happy to connect. Just hit connect. And very happy to chat with you. Just email me. Really appreciate this, Ethan.
Sure. I really appreciate your time. Anyone listening who is considering, you know, even exiting his brand in the future, Kunle is the right guy to talk to. So, thank you very much, Kunle, for your time. It was really a
Thank you,
pleasure
sir.
hosting you
Thank you,
here.
sir. Cheers.
Bye bye.
Bye. All good.